Cogeco Communications shares trading higher after the telecom company reported second quarter results were broadly in line with expectations. First report under the leadership of the new CEO, Frédéric Perron. Let's get more from Jerome Dubreuil, research analyst covering Telecom and Media at Desjardins. Thanks very much for joining us, Jerome. Can you just remind us with Cogeco, what is the bulk of their business? Obviously, their roots were in cable, but are they big now in wireless and internet?
Yeah, thanks for having me. Thanks for the question. So Cogeco, yes, you're right, reported just last night with the first report under the new CEO. That was interesting. Core of their operations is cable in the US and in Canada, approximately 50-50 split. Wireless, they are just launching right now in the US, actually, so no material revenue so far from wireless.
There is competition, though. Who are they competing with? I presume BCE, our parent company, is one of their rivals.
In Canada, you're right. BCE is pretty much the main rival there. In the US, they are competing against the AT&Ts, other cable companies, and also some fixed wireless companies that are starting to make stride in the US fixed internet market as well.
You have a hold on the stock. You think competition could put a curb on earnings growth?
I do. And I think competition will be around for a long time in wireline in Canada. You mentioned BCE has made stride in terms of their free fiber to the home deployment. Now they want to have subscribers on this fiber, and it will take a while before they're happy with their market share, probably. So we think competition should be around for a while. That's the core of our thesis on our hold rating on Cogeco, yes.
You had a very interesting piece yesterday on the telecom industry, and you're saying you're still cautious. You say the Q1 numbers could be rough, partly because the companies, many of the companies have produced forecasts for the year. However, competition, price cutting or discounts has persisted. Even after they made those forecasts. So you think Q1 could be rough for some of the companies?
Yes, we do, and we have reduced our estimates a bit. Just first on the subscriber front, we do think that the wireless sector in Canada is going to be strong once again this quarter. But we're pretty much at the peak of population growth in Canada, if we believe what Minister Miller has said last month. And in terms of competition, you're absolutely right. We're facing a kind of a timing issue here that the companies provided their guidances for 2024, but competition only increased after this guidance was provided. So we're not exactly sure that the forecast companies provided in February fully reflect what we have been seeing in terms of competition so far in Q1.
You're referring there, of course, to Mark Miller, the immigration minister, and the government planning to cut the percentage of non-permanent residents. And of course, if you do that, a lot of those people all of them get cell phones when they arrive here. You have I believe it's a hold on our parent company, BCE. Obviously, the dividend yield has gone high. It's not far off 9%, but the company has indicated that it's going to stick to that dividend policy.
That's what they have said, indeed, that their main priority in terms of capital allocation remains a dividend. However, dividend yield, we think dividend is basically just a decision that a management team can take and does not always reflect the dividend power that a company actually has. Nonetheless, we don't think that BCE is in trouble, not at all. We do think that there is still a consistent free cash flow that will be generated. Our concern is more in terms of the long-term growth that the company will be able to generate, and that we don't think deserve to trade at a premium to Rogers at this point. This is still the case right now.
A stock that you do favor is Rogers. Why is that?
Yeah, so we think this company is too cheap with regards to the growth potential it has. We do anticipate that they will be leading the market once again in terms of their subscriber loading in wireless, as well as on ARPU. They have a strategy of a bit more migrating their customers to the higher end of the market. So probably that will help in terms of ARPU. But also, we're going to be seeing a long runway of synergies and of integration benefits from the Shaw transaction. that other companies don't necessarily have in terms of growth potential, and they're still trading at a discount to peers. So that's why this is our number one pick in the sector right now.
And why is their average revenue per user likely to go up?
So at this point, Rogers has opted to migrate a larger portion of their subscriber base toward their premium brand, which is Rogers, and has not competed as strongly with the flankers brand that we call. So these are the Fido, the Kudos, and the Chatter, for example. So just a pure migration of subscribers toward a more premium brand helps in terms of the average price subscriber base for Rogers customers.
Just finally, Videotron looks set to roll out its Fizz flanker discount brand into other provinces. Is that going to have a big impact on the industry?
So we don't think it's disruptive, but it is material in our opinion. They've had a big success in Quebec. They have a strong platform, and they've been able to capitalize on their strength in terms of digitizing their offer, attacking the lower end of the market with the no frills approach, no customer service there. But that's what a growing number of people actually want. So we think it could be material, yes.
That's